Hey everyone, welcome. I'm Elaine Lowe here with our Chief Content Officer, Chris Gessel at Investors Business Daily.
Good to be here.
So in today's webinar, we're going to be taking a look at a very hot topic, Bitcoin and cryptocurrencies. It seems like that's the word on everyone's lips these days.
Maybe not as much as it was a month or two ago. I have a lot of friends who are talking about it a lot and not so much these days.
A little quieter on that front now. So before we get started, this is a new way of doing things. We've got video today. So if you'd like to focus solely on the charts and slides, take a look at your screen. You can maximize that so you can flesh out the presentation slides that we're showing to full screen, or you can focus more on our lovely faces over here. And if you have any comments or questions during this segment, make sure you type those into the Q&A box. You'll be able to get your questions through to us, and we will try to get to those throughout the program.
Absolutely.
All right, so let's get started. Bitcoin, it's been a wild ride for Bitcoin over these last 2 months, peaking as high as nearly $20,000 per Bitcoin in December, plunging as much as 70% from that peak, undercutting the 6,000 level just a few weeks ago, and now back up to around that mid-8,000 level. I mean, what a crazy ride.
Well, it seems crazy, but it's actually something that we've seen before with other sorts of currencies, commodities, and stocks. And so it follows a pattern, and we're going to go into that of how to recognize these and what you can do about them.
Right, and this isn't actually the first time that Bitcoin's been through this ride or other stocks, like you've said. All right, so what are some of the basics of what we're going to learn today?
Okay. So we're going to go over the basics of charts and why they work, how to use them to make your buys and sells. We're going to look at signs of a climax run and what to do during while Bitcoin consolidates and gets ready for maybe its next run. And we're also going to take a look at other cryptocurrencies and blockchain ETFs and see what possibilities and opportunities are out there right now.
That's right. What else we can keep an eye on right now? Okay, so let's dive into the basics of chart reading first. So you and I look at these charts all day, Chris.
All the time.
So this is familiar to us. But for those of you who might just be joining us, the daily chart gives you a real nice granular look at the nitty-gritty, but we also like to look at the weekly charts here for those longer-term trends. It cuts out some of the noise of those dailies.
Absolutely. It's really important to use both because the weekly puts into context what you're seeing in the daily each day, and it really lets you know where you are in the run and is it getting late or not.
Right. And so let's take a look at a typical chart here. You've got the price bars, which show you the intraday high, low, and where it closed for the day. If it's blue, that means it closed higher for the day. Red, that means the opposite. And you have your red line here, which is the 50-day moving average, some shorter-term action that shows you the health of the stock, that longer-term 200-day moving average. And we generally like to see that red line above the black line, right?
Absolutely. We want to see the stock above the rising red line, the 50-day, and the 50-day above the 200-day.
All right. And then what's this relative strength line here, this blue one?
Well, that's something that's unique to Investors Business Daily. And what it does, it plots how a stock or currency or commodity is performing versus the S&P 500. Because at the end of the day, if you're going to be doing your own investing, you want to be beating the market.
Right. You want to see outperformance there.
Right. So when that line is rising, it's outperforming the market.
Okay. Then tell us a little bit about these volume bars before we move on.
Sure. The volume are coded to the price changes. So when you see blue volume bars, that means the stock was up that day. Red, it's down. And generally, it shows you the intensity of the buying and selling. And you really want to see spikes, blue spikes on the way up and very small red spikes on the way down, or actually red bars on the way down.
So higher blue action means more institutional buying.
Exactly. And you want to see quiet selling when a stock is consolidating. Unfortunately, we've been seeing some intense selling over the last week or two.
Interesting week or two.
But we'll go into that too, and that creates opportunities.
Okay, so let's get into the basics here then of how to use these charts to time your entry into the market. And what are these basic chart patterns?
Well, these are three chart patterns that we spend a lot of time talking about at IBD, the cup with handle, double bottom, and flat base. And we don't really need to go into all the particulars today, but it really comes down to when a stock is moving, it makes a nice run up, and then it takes a rest. It goes sideways for a while. And that's what these bases represent. And so when it gets ready to run again, it will break out, usually in big volume. You really want to see some intensity behind that. And that is the time to buy a stock, currency, ETF, or cryptocurrency.
All right, well, now let's talk about times to sell. So let's look at something called a climax top. What is it? Why is it important?
Well, we have many sell signals that we look at, but climax tops are unique to things like Bitcoin that have made huge runs, and there's a lot of intensity about them. And so, basically what we're looking at is a stock that's been going in a strong uptrend for a number of months, and then all of a sudden it starts going vertical.
Isn't that a good thing?
It is a good thing, but not all good things last forever, especially in the stock market and financial markets. And so these are different things that we look for that tell us the end is near. And so it could be up 50% in just a couple weeks, maybe the largest daily point gains. Something we'll go into a little more detail, an exhaustion gap, the widest weekly price spread on the weekly chart, and then also the 200-day moving average that we talked about. Those stocks will get really far above the 200-day, sometimes 200% or more.
So basically that whiff of enthusiasm is perhaps a warning sign to
Well,
heed.
at that point, it's more than a whiff.
Okay. So let's look at some classic climax tops. And when I say classic, let's go all the way back to the 1600s with the original Tulip Mania.
Right. So in Holland in 1637, people had been crazy about tulips, and they were buying and selling them. And people,
why? What were they using them for?
Well, they were to plant, or maybe just actually what they were doing, buying them, then to sell again. It was really one of the first documented speculative bubbles that we've ever seen. And tulips soared 20-fold in just a few months.
So
and
perhaps
then,
not unlike some of these cryptos.
Right, and then they crashed. And, when you go to the store, how much does a tulip cost? Not very much.
Well, it's been a while since I've been flower shopping.
Okay.
Okay, so let's look at a more recent example. That'll be Charles Schwab around the dot-com era in 1999.
Right. So this is a classic example of a stock going into a climax run. It's in the later stages of the internet bubble. Charles Schwab was one of the premier online brokers, and it had a strong move. It went sideways, and then it really started going up. And those last 2 weeks, you can see they were basically vertical, and then it reversed and started falling. So let's take a look at the daily, and you'll see that it was up a huge amount in just a few days. There was an exhaustion gap at the end, and so a gap is when the day's price action is higher than the high from the day before.
But you'll sometimes see that on a solid earnings report, you'll see a gap, right? So what's the difference here?
Well, if you're gapping out of a base where you're in a consolidation and you gap out of a base, that's a good thing. That's called a breakaway gap, and we'll show you an example of that a little bit later. So breakaway gaps are good. Exhaustion gaps are a time to really be selling, or at least starting to sell.
Got it. Okay, and so looking at this, I mean, it seems like we're getting a little far away from Bitcoin right now, but we can actually use a lot of these chart reading techniques when we're looking at cryptos and these very new emerging seeming markets, right?
Yeah, so they happen over time, different asset classes, completely different eras.
All right, and we'll be getting to that main show soon. But we just wanted to look at a few other examples of a climax top. We've got Wright Aeronautical, again, back here to the 20s.
1920s, and, the charts look exactly the same. And it goes back to that idea, hope, fear, and greed govern all trading. It doesn't matter whether it's cryptocurrencies, stocks, or commodities. Everyone is dealing with their hopes and fears when they're buying and selling.
So when we're looking at these charts, we're really getting an inside look at the psyche of the mass investor market.
Absolutely, and it's just a clear reflection of what's going on in the market.
And the similar thing can be said of gold in 1980.
Right, huge move in the early, late 70s into the beginning of the 1980s. And then the real takeaway from this is it took 28 years for this to make a new high. When we looked at Charles Schwab, just this past December did it make a new high after that peak in 1999. So I've heard a lot of people say they're not so worried about what's been happening in Bitcoin because they're a long-term investor. Well, the fact is, history tells us you may have to be a really long-term investor, sometimes decades, right, exactly. So
you could be doing something else with your money during that time, is what you're saying.
There's a lot that you could do rather than just sitting with something the whole time.
All right. Okay, on to the main show now, Bitcoin. For anyone who's new to the premise of Bitcoin or cryptocurrencies in general, do you want to give us a little primer?
Well, it's the idea that through this technology called blockchain that you can exchange value, and everyone understands what's been happening. It's part of the public record. A central bank can't come in and devalue Bitcoin or anything like that. So it's really this revolutionary new way to exchange value.
All right. And so let's look at just the price of Bitcoin right now. This is a daily chart. Boy, this chart is starting to look a little familiar, Chris.
Doesn't it look like some of the other charts we looked at? So Bitcoin made about a 300% move earlier in the year, then went sideways for a couple of weeks, and then started going vertical.
And let's see what that sell signal would have looked like if you had been paying very close attention to the day-to-day action of Bitcoin.
Yeah, so it broke out of that little consolidation and then ran up 8 out of 9 days.
Which, again, seems like a great thing short term, right, if you're holding on to Bitcoin?
Yeah. But if you know what to look for with these, then you're saying, oh my gosh, then maybe we're in a climax run, and then on that 9th day, you get the biggest point move of the entire run. So right there, that would be my first sell signal. And you know, when you see these charts, you don't have to make an all or nothing decision. Maybe you sell a third at that point, and you wait to see what happens. Now,
so you don't need to offload your entire position all at one go.
Exactly. So a couple weeks later, you know, it tried to make a new high, and the very next day it reversed and undercut the low of that breakout day.
And that would be our second sell signal?
Absolutely. You never want to see a breakout fail like that. It's just it's bad enough when you're in a first stage base, when you're up so high above the moving averages and you've been running. That's not a good sign. So right there, I'd take a second, third off the table.
And you're also seeing much wider spreads in the day-to-day after this initial run-up.
Yeah. Before it was trading much tightly, and now it's gotten wide and loose.
Okay, and what's our third sell signal here?
So it came down, found support near the 50-day moving average, the red line, and then started consolidating a little bit, tries to break out. And again, if this was going to work, you wouldn't undercut that up day there. But what happened is the very next day and the day after, it undercut that day. That would be my third sell signal. So at this point, I'd probably be out. And if I had missed some of these sell signals or the whole sell signal, when you run up this much and then come down and break through the 50-day moving average in volume like that.
That's a big red flag?
Yeah, big red flag. And it's a lot better to get out there rather than to be, panicking when it's down below 6,000 or something like that. Okay,
so even though this may have seen like a spectacular run-up and crash for some people, what you're telling me is there are actually there's well-charted territory here that we could have taken from historical example to take a look at Bitcoin.
Yeah, when you think about it, so it had a big prior move. It went up 8 out of 9 days, had the widest spread, and then, that's at least 4 sell signals off of that list.
Okay, and so this is a weekly look at Bitcoin, and this is something that you were talking about earlier when it came to gold. After that initial climax top, it takes a long time to recover to that previous high.
Right. Yeah, I mean, Bitcoin had an even bigger percentage move in 2013, and then it started consolidating for about just over 3 years, fell as much, I think, as 70%. So at that point, if you sat through it, that's a long time. I've never sat through anything like that. But is it going to be 3 years? Is it going to be 3 months? You don't know. Is it going to be 10 years?
So there might be something more productive that you could be doing with your money during that time. Okay. So let's move on to Ethereum, which is another hot crypto that we hear about. And there are so many cryptos. There are dozens and dozens of them. But this is one that we'd like to take a look at. Ethereum, that reached its recent peak a little bit later than Bitcoin. So what are we looking at here?
Similar to Bitcoin, it had a nice rally earlier in the year in 2017, and then it started consolidating, went sideways for a number of months. And then late in the year and into January, it started its climax run. And same sort of thing, very big move over a short period of time. And I think it was one of the biggest spreads in the weekly chart, things like that. So,
and then a few weeks after that, cuts off its 50-day moving average. Again, this chart beginning to look very familiar.
Exactly.
Okay, lastly, let's take a look at, let me go through all these sell signals here, which you mentioned, This 7 to 8 days of run-up and eventually cutting through the 50-day. All right, now XRP. Now, this one's slightly different. This one's used by a lot of financial institutions. It's not quite the same thing as Bitcoin.
Right, and actually that's true for Ethereum as well. I mean, both Ripple and Ethereum are really built for commerce. They're made to be used, and so Ripple, same sort of thing. Nice big run up earlier in the year, consolidates, and then goes on this 4-week vertical run, ending with the widest weekly spread of its entire run. So right there, and that would be a big sell signal.
Okay. And so with the recent downturn, it's been an interesting week or two, to say the least, in the stock market. But there are some other cryptocurrency and blockchain plays that we could at least keep an eye on for now to see how things shake out, right? Okay, so what's this first one? Bitcoin Investment Trust, not to be confused with an ETF. It's an investment trust.
Yeah, even though it's in our ETF group, but it's actually more like a closed-end fund, which means it can trade at a premium or a discount to its underlying value, which are Bitcoins. So like we've seen before, a big uptrend that then turns vertical, and it shoots up, I think, almost to 38 from 11 in under a week or so, and then sells off extremely fast. So again, all the classic signs of a climax run. And at this point, it's come down, it's found support at the 200-day. A lot of these things have been doing that. Now, you don't necessarily have to wait until it makes a new high. What you do want to see is the stock to maybe make a base above its 200-day moving average, and you could start trading it at that point. But you really want to see it in an uptrend. Right now, that thing is in a downtrend. It needs to go sideways for a while.
Even with that recent bounce off of the 200-day?
Yeah. You
want to wait a little bit longer for things to shake out before you say, all right, I'm going to make a stake here?
Yeah, we have a saying, you don't want to catch a falling knife. That's still a knife.
Okay, got it. Good to know. And here are a few others. Oh, whoops, here we go. Oh, wait, 1 second. Wanted to take a look at this. The breakaway gap and exhaustion gap, which reminds me is a question I wanted to ask you earlier. What is the difference between a breakaway gap and an exhaustion gap? Because when you're looking at these charts, they look pretty similar at first.
They do look similar, but it's where they happen. And so the breakaway gap is when the GBTC was moving sideways. It makes looks like a cup with handle, and then it gaps up above the left side of that base. And then it goes into its climax run, and on the very last day, it's the biggest point move of the run. And it also, you see how there's this little gap of space between the high of the prior day and the low of the final up day. So that's an exhaustion gap, and that would be one maybe where you're selling a little bit during the day and definitely at the close, because it breaks fast. That's the danger when you see these exhaustion gaps. With Bitcoin, you had some other chances to take some profits, but GBTC really didn't offer you a lot lot of time to get out.
Which is why it's important to be able to spot these signals pretty early on.
And then another thing to note, Bitcoin Trust was 480% above its 200-day moving average. So that's more than double of what we typically look for. So extremely extended. But,
since these cryptocurrencies trade 24/7, essentially, gaps don't seem to be as common. Can they still happen?
They can happen every now and then, but you're more likely to see gaps on ETFs and stocks that have more typical trading hours.
Okay. All right, got it. And speaking of trading, where can I find these crypto charts if I want to track this price action?
Well, you can go to Coinbase, bar chart. Just Google cryptocurrency charts, and there's all sorts of options out there.
All right. Those last two questions, by the way, were not from me, but from the brilliant minds of our viewers right now. So thank you. Keep those questions rolling in. All right, so let's move on to a couple other interesting plays that you might want to keep an eye on right now.
Yeah, so just recently we've seen 4 blockchain ETFs come to market. And most of them, they've got some big cap tech stocks in them, names that we're pretty familiar with, like Amazon and Intel, things
So maybe
like that.
Some more familiar names to make you feel a little safer.
Yeah, and you've also got some diversity. So
you're not putting all your eggs in straight up Bitcoin.
No, but you're not going to get the type of gains that you would see in a cryptocurrency out of these. Now, the one at the bottom right block, that one has some interesting smaller stocks that actually have some large positions. So maybe if this really takes off, that might be the one that outperforms.
Good to know. Interesting. And this is the one, right?
Right. Amplified Transformational Data, BLOK. And actually, all the charts look similar to this one right now.
Sliding in tandem with the market at the moment.
Exactly. So I would just keep an eye on this, put it on your watch list, and if it comes up near that old high and breaks out, that would be something that's actionable.
Okay. Another viewer question. Do you plan to make a crypto can slim methodology to analyze fundamentals and market direction?
That's kind of interesting. We'll have to think about that. I mean, as we've shown, really just looking at the charts themselves tells you mainly what you need to know. And I guess if you look at multiple charts, you'll see trends emerging. But that is an interesting idea. I'll have to think about that.
All right. And then one more. Should I look for bottoming bases for GBTC, that would be the Bitcoin Investment Trust, and Bitcoin to get back in?
Yeah, absolutely. And that's what I was talking about.
Right.
You want to see some sort of consolidation form, and it can be around the 200-day. Usually I like to buy the first breakout above the 200-day moving average.
Although this recent bounce that we're seeing, you're saying still isn't quite enough to be convincing enough of an entry?
Yeah. I think that bounce might be 5 days old. Maybe you want to see 5 weeks.
5 weeks. Okay, got it. 5 weeks.
Usually with let me just say that when you get a big climax run like that, typically the quickest that we ever see a base form that is tradable and leads to new highs is a year. Usually it's more like 18 months, and it might be even longer. However, if you're a trader, you want to be aggressive, you want to start rebuilding a position, or just scalp some gains along the way. Look for these consolidations within the broader base.
Okay, got it. So that brings us to the question, what do I do now?
Well, there's always a ton of things to do in the financial markets. And, the NASDAQ is up 30% since the election. And even though we're in the midst of a intermediate correction right now, and it came down pretty fast, pretty hard, and that was really a function of how smooth things were last year. And we were talking about that earlier in the year, that because 2017 was unusually unvolatile, that it was more likely we would get volatility this year. And that's what's happened. So it's normal, and what corrections do, they create opportunities. Without corrections, you don't get new bases. So new stocks are going to emerge. Stocks maybe that have been extended are going to consolidate and give you a chance to get in. So if you're new to the stock market right now and thinking maybe you want to learn more about trading, this actually is a perfect time to get into it, because we're in this correction and you'll be looking at things that are setting up, and when they start breaking out, that's the perfect time to buy.
And for those that are already in, nothing major to freak out about?
Well, not right now.
Yet.
I mean, it looks pretty normal so far.
Great. So let's look at some other growth stocks that you could be paying attention to. We want to take a look here at a monthly chart of Amazon.
Yeah, and just to drive home the point that there's, you can make big gains in trading outside of cryptocurrencies, and there's things to do while they're setting up again. So Amazon, since the bottom of the 2000 bear market, is up 24,000%. And now, let's say you didn't have the courage to buy right there, but after the 2008 bear market, let's check out that. It made a little base and broke out, and it's up, what?
22-fold.
22-fold, and it continues to run. And this is a stock that we've had on Leaderboard, which is one of our premium stock picking services for about a year now. So it's making good gains for us.
Got it. So moving on, NVIDIA. Now, this is a name that we've been talking about here at Investors Business Daily way before it became a more mainstream topic.
Absolutely. And so this is a stock that is involved in artificial intelligence. It's actually in some of these. Thank you very much. Some of these blockchain ETFs. It broke out back in 2016 and is up 600% since then.
Okay, so I wanted to take a closer look at this NVIDIA chart, because you see these two gaps up here. And, is that cause for concern? What's the difference between that and an exhaustion gap? I mean, is that sort of looking kind of climax toppy to you?
Well, actually, that is a little bit of a sign of a stock getting ahead of itself. And so let's take a look at the next slide. And again, this is one of the rules back on the climax tops, and that's breaking an upper channel line. So if you can draw a line across the tops of a rising stock for a number of months, and it goes above that line, that's a sign it might not be done forever, but it's probably going to take a break. And in fact, that's what happened with
Some
NVIDIA.
consolidation right after
It took
that.
about 4 months to consolidate and then started running again. So this is a stock that, it's made a big move. It's going to be in self-driving cars and things like that, the chips. So this is something where maybe it might make a consolidation for a while, maybe come down to its 200-day, but I would continue to watch NVIDIA and look for chances to get into that one.
Got it. And one last one, AutoHome. Now, this is a China-based stock.
Right. Now, AutoHome is a stock that we put on leaderboard recently, and the reason that we like it, the earnings estimates are strong, and it's also early in its run. It just broke out of a second stage base. We like those earlier stage bases, and it pulled back to that 10-week moving average. That's absolutely normal action, and it continues to rise. So again, this is what we're doing at Investors Business Daily all the time. We're finding these stocks, before they break out, and then we follow them all the way up and point out the different places where you can add shares and build a position, and then ultimately note when they start triggering sell rules.
Okay. So we want to get to some of your questions, but before we do, there is a special offer for you guys.
2 months for $20. And again, we're covering the leading stocks every day at Investors Business Daily, whether it's in stories or videos. And it's, if you're interested, if Bitcoin has gotten you interested in how much money you can make trading, you can do it in the stock market as well as other markets. And we cover those leading stocks that are setting up and breaking out. Plus, you get access to our stock lists like the IBD 50. It's tripled the S&P 500 since we introduced it in 2003. And we have lots of educational resources. You can learn all about the chart reading topics.
That's right.
That we
all
taught
the stuff
today.
that Chris was talking about, those cup with handle, all those different base patterns. If you want to get into the nitty-gritty of that, that's all at investors.com.
All right. So let's take some questions.
Yes, let's take some more questions. Here's a good one. Can I short Bitcoin?
Can you short Bitcoin? I don't know about that.
Should you short Bitcoin?
Probably not at this point. I think that the easy money that could be made in Bitcoin has been made if it could be made.
Got it. Okay.
Actually let me revise that. With the futures markets now, I'm sure you can short futures. So you can bet against a stock.
And there's certainly more Bitcoin and blockchain related ETFs that are available on all the different
and then all those
platforms right now.
You might not be able to now GBTC, that was one I was looking at, and I was telling my coworkers, I want to short this, and I go and there's no shares to short, and there were no options either. So but some of the others, you'll see shares and options in which you can take advantage of down moves as well as up moves.
All right. So any comment about swing trading?
Oh, okay. Well, actually, these cryptocurrencies, we see a lot of little consolidations and then big moves. So another thing that we do at IBD is looking for shorter-term moves, and so we have a swing trader focusing on that, and that's absolutely something that, especially when you're waiting for a big move to appear, look for some smaller moves.
Okay. And here's a good question. How do you evaluate volume for these cryptocurrencies? Because it's a little different than how it's typically done in the stock market, right?
That is a big problem. And right now, there are a couple places that seem to aggregate the volume. And again, is it coins or is it the dollar volume of the coins, the value of them? It's a little unclear. But generally, you can see, in these charts, when the stocks start moving or the currencies start moving, the volume kicks in.
Okay. All right. So if there are any other questions, now is the time to get them in. Anything else that you feel like we missed today? Any last words that you want to say about Bitcoin and how we use these time-tested chart reading techniques to parse through the noise?
Well, I say just start looking at the charts, and if you have any experience with them or you start learning about them, you're going to see these patterns develop, and you will really gain an edge on other traders who aren't looking at charts because they're reacting to emotion. And if you can look at a chart and kind of take your emotions out of the equation, that's
purely
a
look at the data.
huge, yes, that is a huge advantage to yourself.
All right, got it. All right, well, thanks for being with us here today, Chris. Thanks so much for watching, everyone. Don't forget that a replay of this presentation will be available at investors.com within 24 hours. So thanks for watching, and we'll see you next time.
All right.